Now, 2020 hits, and it's the year that, it was kind of like every lender's worst nightmare, right?
Yep.
Like, I was on calls with you, and it's like lenders were kind of just scratching their head going, now what?
Right.
But it seemed like you had structured yourself in a way that it may have affected you and affected your business, but you're still here doing deals, still pushing forward. We're still looking at new deals today.
Right,
So
right.
you kind of just adjusted because of the structure?
Yeah, and that comes back to that, again, it's such a fancy term, but, a truly boutique real estate private equity firm. Mm-hmm. And so we're not just here where we have to, originate deals into this box so that we can sell them to Wall Street. We're well capitalized on top of that, and we have the ability to put money out in different tranches. We've built an investor base that trusts us. Sure. And allows us to continue to put money out, even in this more illiquid market.
Tell me, what was your inspiration for scale? There's so many small businesses, entrepreneurs who get to the place where you were at, and you and I had that conversation.
Sure.
And I know others in the industry. Where you were trying to determine, should I scale? How do I scale? What were some of the inspirations for that? Did you read books? Did you talk to people? Where did you find the inspiration and the knowledge on how to scale your business?
The AAPL conference, to start, honestly, has been so interesting and fun to be a part of and watch. Like when I went for the first time, probably maybe 6 or might be coming on 7 years ago, I feel like there were as many borrowers at that conference, like looking to connect with lenders, as anything else. And so to see the secondary market guys and all the vendors and all that stuff, and that turn into like a true, private lender, I can go there and get real value, capital sources, just talking to other lenders around the country, picking the brain of some of the guys that you put in the room there. I took a lot of inspiration and asked a lot of questions about scale, because I knew we could always do this like 25, 30 million bucks, no problem.
Sure.
And the question was, then do you take that next ride up? And to my way of thinking, I think Touchstone, as it's structured now, we want to be doing between 70 and $100 million worth of real estate deals annually. These are very manageable. I can still have that, hands-on approach and know every single deal.
Sure.
From an infrastructure standpoint, here in the office to capital raise, I feel like that's sort of my very manageable. So I hit the middle, I guess, is what I'm coming to. You go to the AAPL now, and you have some guys who want to be billion-dollar lenders. You and I have talked about this at length. I think this is a very local game. I call it, especially now, it's trench warfare. Like we have a $30 million portfolio that we're asset managing on behalf of the hedge fund we sold through to, and like that's heavy lifting. And I feel like kind of being in that range, we'll be able to continue to do that heavy lifting and provide the service and the outcomes that both our investors, by the way, and our borrowers have come to expect.
When you look at 5 years down the road, you just said, I'd love to get to 70, 80, 100 million annually. That to some degree is scale, especially locally, that's scale.
Sure.
Especially when you were talking about 2, 3, 5 million, just 4, 5, 6 years ago.
Right.
You really have already technically scaled.
Yep.
If scale is 10x, you've already kind of gone like 50x.
Right.
So you have, and it sounds like you kind of know where you're headed. And it sounds like owning the Boston market is still a piece of that.
100%.
Outlying maybe Boston area. So tell me just a little bit about 3, 4, or 5 years down the road.
Yeah, I think we'll continue to do our first mortgage bridge lending. That's sort of our bread and butter. And I think that's where $50 to $60 million a year in new loan originations will come from. I think if I think about where do I want to go from here. Small commercial bridge lending, I think, is a huge opportunity. That like sub $10 million area, those guys they're not serviced by the big banks,
right?
Bank of America and everything else, and the local banks are just so difficult to deal with. Once you get into any kind of construction piece or bridge or value add, the banks have a hard time wrapping their heads around that. And so you have very good sponsors, very good developers that you can still get really nice returns on. You can still put it out at private money rates, and you can put that money out at scale. So I think commercial bridge is something we would add. But you hit the nail on the head. Like we can do all the real estate deals we want. Let's call it inside the 128 belt. Like if you look at Boston, there's this 128 ring around the city, and we can do $100-200 million worth of real estate deals. I think very easily
every year.
Yeah. And then, over time, longer term, let's say, I love to continue to build, an equity fund that's a long-term owner of, let's say, apartment buildings.
Sure.
And kind of, get into that buy and hold, type of
sure.
strategy.
Because personally, you're already in the buy and hold space.
Yes,
and
that's
you've
right.
Got some personal
Starting to
holdings.
accumulate some units,
Yeah.
and that's been a very nice, because we see the deal flow, and there are some of these deals that'll come and whether it's the developer's a little squeezed or he can't get it over the finish line or whatever it is. So yeah, we've built up a little Touchstone has some buy and hold assets that provide a good baseline for everything else that we want to do on the operational front.
All right, cool. Well, I think the best thing to do is just go see some projects.
Okay.
We can go downtown Boston and kind of give you the tour there.
Let's check it out.
Awesome.
Sounds good.
Good.
So, did you grow up in Boston? I mean, is this home for you?
Yeah, yep, just south of Boston here, a few miles south is a town called Quincy, Mass.
Okay.
And that's where I was born, raised. I went to public school in Quincy and, lived there right up till I was moved out after college. Back.
So you grew up here. What were your parents like? I mean, white collar, blue collar, like what type of household did you grow up in?
So both my parents worked in human services. My mom was a registered nurse. She was a program director for a residential program for autistic young adults, autistic. And my dad was a nursing home administrator. So it was I like to say, I didn't miss any meals as a kid, but we didn't have a lot of extra money.
Sure. So very much like middle America,
Exactly.
middle class,
Yes.
not a ton of extra, but not starving.
Yeah,
either.
great family. No, absolutely no complaints.
Did you
Awesome.
have any introduction into construction at all? What kind of stoked that passion?
Yeah, well, so when I was in 5th grade, we moved into this big Victorian house built in 1800. And my parents had some work done to it before we moved in, but then
Sure.
we were able to, with my dad, I did a bunch of little projects around the house over time too.
So it kind of sparked that
It definitely did, yeah.
interest a little bit.
Yeah.
Nice. So you went to school here, then college here? Did you go to college?
I did, yeah.
Okay.
So Stonehill College is 30, 40 miles south of Boston. I had done a year in Argentina when I was actually a junior in high school.
That's
I was
awesome.
in that the Rotary International Exchange Program.
Sure.
So I kind of was done with being away.
Yeah.
So I went to college local, and while I went to college, I had an internship the summer of my sophomore year at Merrill Lynch.
And so that kind of got you started. So you're a finance major, but then that really kicked off your financial career.
Yeah, exactly. Yeah. So it was that internship was literally started in the mailroom, and then was able to get a full-time job at Merrill right out of school.
That's awesome.